What's going on, guys? It's GBP, baby. Welcome back to another weekly review and forecast. I hope everybody's doing well, and let's get straight into things. So I'm going to start by looking at the economic calendar. Personally, I use my FX book for the calendar just because I like their layout and whatnot. And you'll see that Tuesday, Wednesday, Thursday and Friday all have very high impact news events with non-farm payroll to finish on the Friday, which should be quite exciting. So generally, it appears that every day, well, Tuesday through Friday, does look like there should be events that will occur that will allow us to trade. However, based off the market conditions and where we're at currently, it does seem very low probability with the start of the week, and you'll see that once we get into the charts. But it's just important to take note that we do have, high impact news on the Tuesday right through Friday, with non-farm payroll and jobless claims on Thursday and Friday, which tend to move the market quite a lot based off what I've seen in general. Also, one thing to take note of is the times. This is something I need to get better at. This is currently in GMT. Let's just quickly make this New York time. I'll figure out how to. Like so, and now that we have our time in Eastern Standard, you can see the times that it's going to appear in our charts, because remember, we should set our charts to New York time. So our first event is going to be first high impact news event will be 9:45 New York time on Tuesday, with everything else from Thursday onwards being 8:30. So definitely something to take note of, and we know that we can start plotting these times in our charts once we put our daily dividers in, just so that we know when to expect movement and to see if it offers us any setups. So now let's get into the actual charts themselves, and I am going to start on the monthly, as we've now started a new month of March. This year is flying by, and yeah, we can see that we've already started on Friday. But what I'm going to do is I'm going to be marking PD arrays above the market and below the market, and what that means is above current price and below current price, just to see where price will likely be drawing to. Now, in the previous video, I did bring up the seasonal tendencies, and we saw that March generally does tend to be a down month on the dollar. However, there is usually some kind of rally to start off with, so that's something to consider. I don't know how applicable it's going to be, especially like I said in these world conditions and such, but regardless, let's just get straight into it. So we can see that we have this bearish order block on the monthly, which I've had my eye set on for quite a while now, if you've been watching my videos. So I'm going to get that delineated as a monthly bearish order block, and I would like to think that price will want to draw to it still in this month, but honestly, I think I'm going to have to give the month a little bit of a, maybe the first week before we start to frame the rest of the month. And then we also have this bullish order block right here, the opening of that, which is going to be significant as well. Remember, the high, opening, low and close of candles are the most sensitive parts of them. So that's why I'm going to mark the opening specifically, because we haven't traded to it since last month. Also, the high has already been traded to, so we don't really need to look at that. So right now I'm going to be looking at this open. So let's just get that delineated like so, and we'll put monthly bullish order block open, and we'll make that black. And another thing to take note of as well, but I'm not going to mark it out, is the fact that there is actually a volume imbalance here, and price has delivered through on the upside, meaning that this should provide support anyway, because it should act as like an inversion fair value gap in the way that it should provide support. But yeah, those are pretty much the two levels I have my eye set on moving into this month in general. I want to see how price treats this bullish order block opening, and this and see whether price does want to draw up to this bearish order block over here. If price does trade through this, the lowest I'd expect it to then trade will be the mean threshold, and the mean threshold of this, we can just get that delineated, is right here. So it's going to be the midpoint, so we can get that marked out as well, because like I said, if price does want to trade into it, the very lowest I'd want to see it respect will be this, before changing my overall bias on this time frame with an expectation to trade lower. But remember, this is the monthly. It's going to take a long time to form, so I don't want to get too caught up on this time frame. Let's go down to the weekly, and you'll see again that monthly bearish order block right here lines up with pretty much the midpoint of this massive weekly bearish order block, and then we have this monthly bullish order block open as well. Now over here, right in these three candles, this is what you call an implied fair value gap. the reason it's an implied fair value gap is because there's only been deliverance on the upside. Well, we can only see deliverance on the upside. For example, this up close candle, and then this wick ended up closing higher as well. So this is an implied fair value gap. ICT has only spoke about this once or twice in his videos, so I don't want to speak too much on it because he hasn't spoke too much on it, and the reason I'm able to identify them is through my back testing. But I do know that price may trade into this and will treat it as a fair value gap the same way it treats any other one. So this is an implied fair value gap, and again, price may want to draw into that before we see price potentially turning around and running towards that monthly bearish order block high. Another thing on the weekly that I want to bring our attention to is going to be this long wick right here. Of course, I'm going to look at the midpoint. That's what we call consequent encroachment. So let's just get that marked out. 626. And I'm going to write weekly consequent encroachment. Ooh. Like so. So in terms of moving into the new week, what we need to figure out is, do we want to see an up close week or a down close week? Generally speaking, I would like to see a down close week, but with the amount of news and non-farm payroll on the Friday, I wouldn't be surprised if it was, quite a messy week in general. But if we're anticipating a down close week, and the reason how I anticipate a down close week is because I want to see this implied fair value gap get traded to, then we need to start thinking about what is the highest we want to see price trade and the lowest we want to see price trade. Now what you'll find is we do have this nice bearish order block here. Specifically, the volume of it is what I'm going to draw out, because like I said, price should respect that if we are to be seeing bearish prices for the rest of the week. But like I said, when we drop down to the daily and the hourly and 4 hour, you'll see how consolidated and how ugly price action has been in general, which is why I'm probably not going to be touching the charts Monday and Tuesday, just because I want to give it a chance to catch itself. Last week was disgusting in terms of delivery. Although we were pretty accurate, it wasn't the best, and because of that, I am going to be very cautious going into this new week. But other than that, we've got a bearish order block, weekly order block right here. So again, I'd like to think that we can find resistance there if we are going to be trading into the implied fair value gap and into that monthly bullish order block open. Now don't get me wrong, if price trades through that, so be it, and then we can start looking for the weekly consequent encroachment and potentially this high to get reached. So it's not the end of the world if it doesn't do as we're anticipating. That's another thing I need to make clear to you guys. It's not about getting it right, it's just about understanding general direction. And from the weekly, we can see that we have this implied fair value gap down here. We've had downwards price action, and we've taken out buy stops. So expecting a down week is not, is not out of the ordinary. We can also look at the midpoint of this, and you'll see that the midpoint of that wick lines up with that weekly bearish order block. So I'm going to get that marked out for us as well, as like I said, in the new week, price may refer to that, and we'll see how price treats it in the new week. So let's now go to the daily, and you can see last week's price action. If you watched last week's videos, you know that I was anticipating price trade higher. I had a close eye on this value imbalance to get traded to, but that's not what happened. You can see we traded lower. We've taken out bearish order blocks here, and we could start looking at this down close candle as a breaker. High, low, higher high, and price is delivered to the downside, right? Meaning that this down close candle may be acting as a breaker now, and we're seeing it treat it as so with Friday's price action and us closing lower. So that's something to consider. And again, our implied fair value gap residing below here, very beautiful, nice swing low just below here. So there's going to be what below there? Sell stops and sell side liquidity, and we have this bullish order block. What I'm going to bring our attention to on this bullish order block is going to be the midpoint. Now you can see we traded to it on the Thursday. However, price may want to trade back down there again and grab those stops, which is completely fine. Also, if you look at the volume of the block and the midpoint, you'll see that lines up with the low of the implied fair value gap. So I'm not going to draw all of this out just because we already have the implied fair value gap from the weekly on there. But generally speaking, I am watching these levels to get traded to in the new week. And like I said, we have taken out stops. We've taken out stops 3 times up here. That's something to consider as well. We took out buy stops here, and then on the Friday we took out buy stops again here and got rejected away. So anticipating lower prices into this implied fair value gap is is reasonable. Furthermore, depending on how quick we reach this implied fair value gap, for example, if say Monday and Tuesday manages to reach down here, then we can probably expect a midweek reversal for us to trade higher for the rest of the week. So again, it's really dependent on how Monday and Tuesday are going to be trading this week. Let's go to the 4 hour, and you can see how disgusting price action has been. Here's that high that got taken. Here's that high that got taken again. And then we had a nice break in market structure on the Friday, looking like we're going to continue to the downside. We have some sell stops below here and here. So there's going to be sell side liquidity residing below here. And again, that fair value gap. I keep bringing our attention to that. So what am I expecting moving into the new week? Overall, I'd just like to think that we can see a continuation lower, and then I want to see our price acts once it does reach this level. Do we get a nice reversal? If so, we can start looking for longs into these highs. Other than that, price, if anything, if it trades through it, then we should see this level be acted as resistance and for us to start pushing for lower prices. So that's pretty much my expectations on dollar. Let's just go to the hourly. Again, clear break in market structure. There is a breaker here. Why? We got a high, we have a low, and we have a higher high, and then price is broken to the downside. So in terms of looking for setups, we can draw this candle out, and when price does return to this level, we know that we can be looking for shorts on dollar and longs on our pairs, because it should act as a breaker block for us to run down into these lows, potentially here, and like I said, maybe down here as well. So let's just get that drawn out as a breaker. Very nice setup there. But again, depending on how Monday and Tuesday trade, you know, my biases can very easily and very quickly change. Another thing to take note of, fair value gap coupled with a breaker. That's a very high probability trade execute setup as well. So I'm definitely going to keep my eyes on this. And another thing to take note of, moving in onto Monday, be cautious in that Monday may be very consolidated. It may be very quiet, purely because Tuesday, Wednesday, Thursday, Friday is when all the big news is happening. So that's everything on dollar. Here's last week. As you can see, very crazy. We traded lower, creating the low on a Tuesday, traded higher on Wednesday, and then, you know, a lot of back and forth price action. We pulled back into the range, traded into a breaker. Nice break out here, but then price fails to take out these highs. Swept it just about on the Friday with an aggressive trade lower. So yeah, that's everything on dollar. Now let's go on to GBP. So we're going to start on the monthly on GBP. And I will put up the seasonal tendencies for GBP as well. You can access these in the Discord, guys. Make sure to join the Discord. And if you've been watching my videos, you'll know that I wanted to see this monthly fair value gap get traded to last month. But you can see that price failed to do so. And now that we've started March, again, if we're expecting some lower movement on dollar, what does that mean for GBP? We should expect some kind of higher movement on GBP. So I'm just going to mark out a few things on GBP of where it could draw to on the upside. We do have these relative equal highs here and here on the monthly. So we have buy stops residing above there. We can call that relative equal highs, REL. And I'm just going to put monthly as well, because we can see those on a monthly level, meaning that, again, there should be a lot of buy stops residing above there. So we'll get that drawn out like so. And then I'm also going to mark out the midpoint of this long wick. When you see long wicks like this, guys, always draw the midpoint out, because price will trade to it, and it really helps to frame, okay, is price going to continue higher and take out the high, or is it going to respect it and turn around? Because what you'll find, if price is going straight through it, it may gap through it, come back down, find support, and trade higher. And this is on all time frames. So that's something to take note of. And we do have a fair value gap up here, but again, it really depends on how dollar wants to trade, and with everything that's going on in the world right now, I wouldn't be surprised if it caught us off guard. But let's just get that consequent encroachment marked out on the monthly consequent encroachment. If price does want to reach up there, it doesn't have to, but we know that it can, and it's on our charts if it does. In terms of sell side, so in terms of below the market, what do we see? We have a clear fair value gap imbalance right here. It would be nice to see if price can manage to finally trade into that. So we'll get that delineated as monthly fair value gap. Like so. And then obviously we have last month's low and December's low that would have sell stops residing below it, which is completely fine. So now let's go down to the weekly. So you can see that we had a up close week last week, the previous week, and then last week we had a down close, but you can see price fails to take out any lows. So there is a level of bullishness that is getting presented to us right now. Another thing to take note of, if you look at this bullish order block and we look at the midpoint, you'll see our prices, yes, it's wicking below it, but we're finding support at that 50% level. This isn't ideal if we wanted to see lower prices. So again, these are all suggesting price may want to trade higher. If that's the case, we should be anticipating an up close week. which means that we want to see some kind of low get made and then also run into some kind of target and buy side liquidity. Now, the GBP is very ugly. Since December, it's been very ugly. You can see it's not very clean. We obviously have those buy stops on the monthly above these highs. Whether price will reach up there is another question. But yeah, let's just try and see what we can do. We do have a fair value gap down here, which should act as an inversion fair value gap and should provide support. Why should this be providing support? Because we've traded through it on the downside and then on the upside and closed above it. We wicked through it, traded back through it again. So this has been traded through quite a few times, but overall we've traded higher off of it, meaning that it should continue to provide support. In terms of targets, we can look for last week's high to be traded to, with a potential reach above these highs. Now, as far as I'm concerned, if price is going to reach for these highs, it's probably going to go for the monthly relative equal highs. Like, it's not just going to take out this high or this high, it'll probably trade right through it. And because of that, I am going to mark out the midpoint of this massive wick as a potential target for buy side moving into the new week. So we'll get that marked out like so. And then we know that that is our weekly consequent encroachment, and we'll see how price treats that in the new week. Like I said, if price trades through it and finds support at it, it means that price will likely want to continue higher. But other than that, I'd like to think that we can find some kind of resistance. In terms of sell side and sell side targets, obviously we have this massive monthly fair value gap to reach for and relatively equal lows below here. So I don't really need to get those marked out on the weekly. Let's go to the daily, and you'll see our price is showing support for bullish PD arrays. For example, this low here fails to take out this low. This bullish order block here is connected to this bullish order block, and you can see on Friday we traded down into this bullish order block and had a nice reaction off it. So I wouldn't be surprised again if we had a continuation with a run for last week's high the other week's high created on the Thursday, where there's going to be buy stops residing. So let's just get that marked out. But again, guys, these charts are disgusting. You don't understand how difficult I'm finding this. So we traded down, bullish order block. There's that inversion fair value gap. We need to see how price treats that moving into the new day. Again, Monday might be quiet, but if dollar wants to continue lower, we know that we can start looking for longs with a target of this buy side liquidity and to that weekly consequent encroachment we were talking about. Let's go to the 4 hour, and you'll see our price actually closed inside of that fair value gap. Not ideal. We do have a bullish order block here, and it is going to act as a breaker the same way that order block on dollar here that we drew out. High, low, higher, high is going to be, this green candle is going to act as a breaker. So we can look at that in the same nature, because we have a low, we have a high, we have a low, and we traded higher, right? Meaning that this last down close candle before the up move should provide breaker behavior. So we can draw the high of that out, and that may form some setups. I'm not saying it's going to form setups, guys, but it should, and it very well can. You'll also see that this wick traded down into a breaker from over here. We've got a low, a high, a low, and price very, very, very ugly made its way above this high. So we look at the last up close candle, and you'll see our price traded nicely down into that on the Friday. So these are all things to consider, but overall I am going to look at this to see how price treats that level. Let's go to the hourly, and you can see price very may well get there quite quickly, but we need to see how price overall treats it. And does it say I want to trade higher? Are we going to see a reaction off it? Is it going to want to start running for these highs? And like I said, we've got relatively equal highs with buy side liquidity above there, and again that weekly consequent encroachment. Furthermore, on the 4 hour, if we go back to the 4 hour, you'll see we have a massive bearish order block, not a massive one, sorry, we have a bearish order block up here, a part of this liquidity void. Now this liquidity void hasn't been completely filled in yet, so we can anticipate that getting filled if dollar wants to move lower. If that's the case, we can look at this bearish order block, which is lined up with the consequent encroachment to be traded to. So again, we have buy side targets to reach for, but if we see a clear break in market structure and willingness to want to go lower, we know that these lows here, and here are going to get targeted, and we have this huge monthly fair value gap. So it's nice when we have both sides like this, although sometimes it's nice when you have both sides marked out like that, but it also shows how consolidated current market conditions are. Finally, we're going to finish on Euro USD. We're going to start on the monthly as well. Let's take a look. So again, same thing as Euro and dollar. So in terms of Euro, I did want to see lower Euro. Euro did trade down into this fair value gap and close it, right? So we've rebalanced this range. So Euro trading higher it's not surprising. it's almost justified because we came down, filled a imbalance below market price, as in the discount in the range that we're currently in. So now it should be looking for some kind of bullish PD arrays. On the monthly, you can't really see much, but I am going to mark out last month's high. So, February's high, because price may want to draw to that. And then we do have a rejection block level up here, but I'm not going to bother mark that out just because of, we'll go down to the weekly though, and you'll see that February's high is lined up with this high quite nicely. Relative equal highs right there. Implied fair value gap, I'll show you, just above there, right here. This is our implied fair value gap. So price may want to draw to that on the weekly. So I'm going to get that drawn out in blue. We don't want a middle line. And I'm just going to write weekly implied. Fair value gap, that's fine. So again, price may want to draw into that, and then we have a bearish order block as well. So in terms of the upside, price can trade higher. We've got a weekly implied fair value gap and a bearish order block, which lines up with the high of that. If price wants to overshoot the implied fair value gap, then we would then look for the opening of that bearish order block, where we also have another weekly implied fair value gap right here. So technically, this whole range from this candle's open to this candle's open is an implied fair value gap, this whole range. So I am going to, again, this is something I'm still studying, but I am going to watch how price trades through it and makes its way through those levels, depending again on how dollar wants to act. You can see we traded lower into a breaker high, got a low, a high, a lower low, and price is broken to the upside. What do we look at? We look at this swing, and you can see our price came down beautifully, touched that, and look at the reaction on Friday we had. So we can anticipate some kind of continuation with, again, that implied fair value gap up here and the swing high up there, which takes us to that bearish order block I was talking about. Another thing to take note of, remember on the weekly I just showed you and said this is a implied fair value gap. Well, when we drop down to the daily, you can see what between this low and this high, a fair value gap. So this is where, you know, the algorithmic and coding like that's basically code, isn't it? We just saw something on the weekly, you know, based off the weekly, we managed to understand that this is a fair value gap, and then on the daily it appears. So yeah, that's just something to take note of and study. We have a bullish order block here. This can get reclaimed. What do I mean by that? I mean that price may want to trade back into this. Like price may come back down into it, and we can get a bullish reaction off of it to trade higher. So we can take that into consideration when dropping down to the lower time frames. But overall, higher prices should be quite smooth. I say smooth on the euro, just because I can clearly see a fair value gap up here that will get retraded to the fair value gap, the implied fair value gaps on the weekly here, and this massive bearish order block as well, which may get traded to, and consolidation. Let's go to the 4 hour. You see, remember, I just drew out that this is a reclaimed order block. It's not reclaimed yet, but we anticipate it being reclaimed. So let's put anticipated reclaimed order block, just so that we know when price trades back down into this level, we can start to potentially look for longs depending on what dollar's doing. Remember, it's all dependent on the dollar and what dollar wants to show us. But yeah, at least we have that marked out as a potential you know, setup for opportunities. Again, probably gonna wait for Tuesday or Wednesday before even thinking about trading, with Thursday and Friday being my preferred days. So we have these relative equal highs above here and here for price to shoot for. Fair value gap down here on the 4 hour. With that anticipated reclaim bullish order block, we can go to the hourly. You can see how disgusting last week was. We came lower, higher, lower, higher. But one thing to take note of is price is respecting these lows. So as far as I'm concerned, if price wanted to go lower, this low should have taken it and we should have moved lower, but we didn't. We saw a bullish reaction away from it, trading higher, with dollar also doing the same. So that's what is keeping me kind of understanding that price is going to want to draw to the upside. Again, all these highs, there's going to be a lot of buy stops residing above there. So it's going to be interesting to see how price trades in the new week. So yeah, also that reclaimed order block lines up with a breaker again on the low time frame, low, high, lower low. What's that last up close candle? That last up close candle is a breaker. So when price comes down into there, we want to see, does it treat it the way we want to? What does that mean? I want to see a reaction. I want to see bullishness come off of it for us to start looking for setups with the expectation to potentially reach for this buy side liquidity. So I hope, guys, this was a long video. I hope that makes sense. I hope you've learned something. If you have any comments or questions, please drop them in the comment section. Join the Discord. I am active in there. And yeah, I'll catch you tomorrow. Although if tomorrow is stupidly quiet, as in if it is very consolidated, I probably won't post. But Tuesday, Wednesday, Thursday, you know where to find me. Thanks for watching, guys. Smash subscribe, and I'll catch you in the next one. Peace.